This is week 7 of investing every week in the stock market. I started this series to document my journey in the stock market and maybe to motivate people to start investing themselves or to stay consistent with their investing. This week we have around $1,000 to invest in my non-registered account, plus we have some leftover dividends that I've received in my other accounts for a total investment amount of around $1,300. My first buy, as always, is going to be in the S&P 500. These are 500 of the biggest companies in the United States of America. They include tech companies, manufacturing, insurance, healthcare. Any industry that you can think of is probably included in the S&P 500. Over the last year, as you can see, this has returned 36%, has done pretty well. And I think for myself and my goals, which is increasing my portfolio value, I think the S&P 500 is a good bet because this has historically gone up 10% on average for the last 40 years. So I'm gonna go ahead and buy 2 shares of the S&P 500, queue the order, and done. My next buy is in the NASDAQ 100. Much like the S&P 500, these are 100 of the biggest companies in the United States of America. The only caveat here is that they're extremely tech focused. Nvidia, Apple, Microsoft, Google, all are included in the NASDAQ 100 and now account for a substantial portion of the entire ETF. But for someone like myself, personally, I think tech is going to keep on providing value in the future. We just saw this big news about how Google has made a breakthrough in quantum computing. And not just Google, I think tech companies in general are going to keep on creating this value since they do have the most money. We have to remember that their cash reserves are insane. I just don't have any other word for it. So I'm gonna go ahead and buy 1 share of the NASDAQ 100, queue the order, done. My next buy is going to be in a leverage all equity ETF. There's 2 elements to this. Leverage. What is leverage? Essentially, this just means that the ETF provider is taking out a loan to buy more shares of the underlying holding. And what that does is that it magnifies the returns, but also the losses. So let's say that the underlying holdings go up by 10%, a 25% leverage ETF like HEQL is going to go up by 12.5%. The reverse is also true though. If it goes down by 10%, this ETF is going to go down by 12.5%. Pros and cons are there, but for a long-term investor like myself, I think I am okay taking on this risk. The alt equity portion basically means that this ETF has US holdings, Canadian holdings, and also exposure to the international market. So I'm gonna go ahead and buy 4 shares of HEQL, queue the order, done. My next buy is going to be in Pepsi. Pepsi is a company that has not done well in the last year. As you can see, it is down nearly 5%. But I think for me personally, this is where I want to get in. The financials look fine. Revenue has been increasing at a steady rate. Profit margin is also steady. EPS is also growing, although slowly. And the biggest thing is that Pepsi is also a good dividend payer. The dividend yield is now 3.3%. And I think I'm okay risking some money to buy individual companies if the risk to reward ratio is actually good. Not to mention their products are consumed worldwide and expansion possibilities are still there. So I'm gonna buy 1 share of Pepsi. To the order, done. My next buy is going to be in the Canadian market through this ETF called VDY. The Canadian market has done well in the last year since the Bank of Canada has decided to cut interest rates, trying to boost an economy that is pretty much stagnant. This ETF includes industries like banking, insurance, and also telecom, oligopolies in Canada that always flourish, and I want to take part in these oligopolies, pretty much. That's it. So I'm gonna go ahead and buy 4 shares of VDY. To the order, done. My next buy is going to be in a covered call ETF called HYLD. This is a Hamilton ETFs product that pretty much tracks the S&P 500. Covered call ETFs are very controversial in investment circles online since they sacrifice long-term potential growth to give you income now. Why do I choose to do this? As you can see, I'm only investing $57, but why do I choose to do this? The primary reason is motivation. Seeing that dividend income go up every month keeps me motivated to invest pretty much thousands of dollars in the stock market throughout the course of the year, because for a long-term investor like myself, I'm not going to realize a lot of my gains later on in life. Seeing some income now, although very minimal, keeps me motivated to invest. So that's why I'm going to place an order for 4 shares of HYLD. Submit the order, done. My last buy is going to be in HDIV. Once again, a Hamilton product. This ETF tracks the TSX60 and is a covered call ETF. It also has some exposure to US financials, which is why the return has been good for the last year, it being up 17.32%. Investment philosophy is extremely similar as HYLD. Just want to see those dividends come in now, although only investing $36.2, as you can see, still keeps me motivated. Cue the order, done. Now we're just dealing with leftover money in all of my accounts. The first account I'm going to deal with is the TFSA. We have $145 left, and the first ETF that I'm going to buy is HXQ, or the NASDAQ 100 ETF that we've already bought in this video. So I'm just going to cue the order, done. We have $59 left in this account, and I'm going to go ahead and actually buy VDY. 1 share of BDY, queue the order, done. The next account we're gonna deal with is my FHSA. We have $35 in this, and I'm just gonna invest this in ATQL, or the all equity leverage ETF that we've discussed before. Queue the order and done. Last account left is the RRSP. We have $65, and the first stock I'm gonna buy is USSL. This is a leveraged S&P 500 ETF. This is also 25% leverage, which means that the returns of the S&P 500 are going to be magnified by 25% to give me the total return for this ETF. So I'm gonna buy 2 shares of USSL, queue the order, and done. We have $16.94 left, and with the remaining money, I'm just gonna buy 1 more share of HYLD for $14.29, queue the order, and done. So that's it for this week's video. Week 7 rolling along nicely. If you enjoyed this video, please smash the like button and the subscribe button. Every subscriber helps get this video to the right people also interested in learning more about money and finance. I'll see you next week.